Hey, what's up, Loan Atlas family? My name's Josh Metal, and I am here with none other than Eric Bibel. Good to see you today, my friend.
Great to see you as well, Josh, and community.
So, Eric Bibel took something that he learned inside the Loan Atlas and was able to lock 33 loans in 13 days. 33 loans in 13 days. And I just had to interview him on this process, this strategy that he learned inside the Atlas, and then furthermore, how he went about executing it. So, Eric, let me pass the baton over to you, my friend. Tell us a little bit about how you locked 33 loans in 13 days.
Well, again, thank you, Josh. Thank you, Lone Atlas. Really appreciate all that you're doing and just the opportunity to be here and speak to what I've learned through the community and how I've employed it and deployed it within my business to field success. And that headline, 33 locks in 13 days, sounds, oh my gosh, how can I obtain that? And had you asked me this question pre-COVID, I would have looked at you and said, what's wrong with you? And really, in this current environment, I probably would have said the same thing. But you touched on the key point, and it was through what I pulled from Tim, from the Lone Atlas community around the strike rate, and really doing the work in advance of this market movement to set yourself up for success. And over the past year, I mean, we're sitting here in October of 2024. Interest rates started coming down. Now they're going back up. It's been a grueling 2 years. It has been tough. But I saw a glimpse of market opportunity last year, and this is where this concept really started gaining legs. Identifying the opportunities within your database. Segmenting the database from, okay, if we have a rate at 8, what would an intelligent refinance for that client look like? Having that conversation with the client and setting forward the strike rate. Key components that I found was strike rate, critical, but most importantly, the conversation. The conversation has to be had with the client, and you have to stay in front. And then we fast forward to what happened and started occurring in early August through September. We saw a run at rates. We were one of the first within our company to get this opportunity because we had set up all of the proper rate alerts, rate watch there. And as they started coming in, it was just boom, 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 boom. And back to the point where, oh my gosh, how could you do that in 13 days? Well, we had done all the work over the previous 12 months. So it was just now kind of going and picking up the reward.
Well, and you, there's a lot of gold in what you just said there, Eric. So let me net a little bit of this out for everybody. So the key components here, first of all, if I define a strike rate, it is the interest rate or payment. You could go after strike payments that it makes irrefutable sense for that customer to move forward. And what Eric said was, you do the work to get that agreement with the customer. If I'm at 8, you've shown me the analysis at 7.25. You've shown me how much I'm overpaying at my current rate of 8%. And you are going to illustrate for me how much I'm going to save over the next 5 to 10 years. And then you get my agreement. Yes, Eric, at 7.25, that makes irrefutable sense. Lock me in and let's roll. So that agreement, you may make an agreement to hit a strike rate at 7.25 when rates are at 7.75. The key is doing the work before the rates get to 7.25. Is there anything else you'd like to kind of clean up or improve upon how I said that?
Yes, and you said it very well. But what really stands out and has stood out to me through this whole time is the infamous, it's Tim and it's time. And really what it comes down to is what you just articulated, doing the prep work now. Yes, rates have gone up higher, yet we saw rates lower just a few weeks ago. People may have missed that opportunity. So action you can take right this very minute. Get on the phone while rates are approaching 7% and saying, hey, we missed that window of opportunity at 6.25. Yes. Look, what I can do for you, Mr. or Mrs. Client, we know we missed it. Let's not miss it again. Can I get your commitment today if I set this alert that when this hits, it auto locks on your behalf and all I need is signatures on the loan estimate and updated documents? Can you commit to that, Mr. and Mrs. Customer? And then you've now created an experience, much like I did 2 months ago, where it's set, it's done, and all you need to do, you're the victor. Hey, Josh, Remember that conversation we had a few weeks back or a few months back? Guess what? It's here. Let's go.
Really well said, my friend. Really well said. Okay, so we talked about having the conversations in advance of the interest rate being there. And the reason why, I think we should illuminate that. Number one, if you're not having those conversations with your past customers, their current loan servicer is, and they will beat you to the punch. If you're waiting for the rate to call them, trust me, you're not as fast and your price isn't as sharp as the servicers. So that's number one. Number two, when the rate hits 7.25%, Eric doesn't have time to call 33 people and sell 33 loans, because by the time he does that, the rates are gone. The chance is gone. So we have to intercept the servicers and we have to do the selling before the rate is there. So once he walks into the office and 7.25% is available, it's just copy the file lock. Or if you don't have their application, they've applied in advance and you're just going in and locking the loan. And then as Eric mentioned, hey, it's Eric and it's time. We talked about the 7.25%. I want to let you know that your November payment is the last payment on your mortgage that you're going to overpay. Starting with your new payment in January, it's going to be at the lower amount, saving you the $525 a month that we discussed. Congratulations. It's a pleasure to serve your family. Boom. There's no selling. It's just, here's the next steps. My production partner is going to reach out to you for the items we need to move forward.
Spot on. And that's, I think, a piece of the missing puzzle. This idea was introduced in 2022. There was talks about, setting the refi pipeline as we thought we were coming out of, the rate run. And I thought at that time I had set up, done the good work in advance. Well, we know what happened in December of 2023. Yes, that was December of 2023. We saw rates trailing down. We thought it was the start. Well, we know what happened thereafter. Rates shot up. Well, because I did not do the upfront work that I did this last go, to your point exactly, Josh, it was me having to get on the phone and explain, well, here are the options. And it was, instead of 20 minutes of work, I had created 5 hours of work, and trying to duplicate that over, as many clients as you can serve. There just was not enough time in the day. And in turn, as rates rose, we missed those opportunities.
Mm. So, Eric, you also mentioned that you're looking at this current upward swing in rates as an opportunity. So tell us a little bit about what has your conversation been with clients who may have missed the opportunity? Because I'm sure you reached out to a lot of people. They didn't call you back. You've still got your eyes on them. How do you use this opportunity of an upward shifting interest rate environment to kind of set the hook or deepen the hook into those customers?
Great question. And there's two camps: clients that, were non-responsive. And again, it was summertime right before school. So people were likely on vacation and they're, hey, never again, you have my permission to lock now going forward. So that was one gain. But the others were the greedy, the ones that I think it's going to go a little bit lower. Everything that we were seeing in the media said rates to 5, rates to 4, wait. You name it, it was there. This is now additional market confirmation that these windows of time are not long. They're not guaranteed. And who knows what the next turn is. So using market forces as an opportunity to say, look, you waited, you decided, hey, I want a little bit more. Well, look at how much we lost because of that decision. I don't have a crystal ball. I can't tell you what's going to happen next. But what I can tell you is when this hits again, do we have your commitment to take advantage so we don't miss for a second time?
Dude,
much easier conversation.
So good. Don't make the mistake of not calling your customers about refinancing because rates are going up. This is an opportunity to set up that strike rate and show them exactly as Eric said, nothing is guaranteed. But if we agree on a strike rate, what is guaranteed is I will proactively manage your mortgage indebtedness, and we will lock in at that rate when the opportunity presents itself, and you won't lose that opportunity to save $75,000 over the next 10 years or whatever that number is.
Definitely.
Eric, last question for you. Were all of those 33 locks people that were in the 7 and 8% interest rate range, or in this process of reaching out to your past clients and having these conversations? Did you find anybody in the 5s and the 6s that needed to do cash out or had some other financing need?
Yes. So in that window, a majority, yes, were high 6s, low 7s, even some 8s that weren't grabbed in the first go. But we extracted 10 cash out strategies, paying off HELOCs, 3 of, combination purchase. So it was by definition a cash out refi, higher rate, but lower cost of debt. And the others were unfortunately restructuring of other debt, consumer credit cards, massive credit card debt. So there were cash out opportunities where we had set strike rates or strike costs as the market moved as well.
There's never been more equity in U.S. homes than there is today. The mortgage balances have been paid down. The appreciation has been consistent for over a decade. When there's equity, there is opportunity. There are people who need access to cash. And there's probably never in my 23-year career can I remember more confusion about what's going on with mortgage rates. Wait, the Fed dropped interest rates by 0.5% and mortgage rates went up 0.7. Realtors don't understand that. Customers don't understand that. And that creates an opportunity for us to have really valuable conversations. But you got to do the work. The genius is in the execution. You got to call those customers, set those strike rates, find out what's going on with their life, and then add value to wherever they are in their journey.
Couldn't agree
Eric,
more.
Appreciate you so much, bro. I want to just quickly share some resources inside the Atlas. You did an incredible coffee talk with Holly Walters, Tim Brahim, Craig Strent, all about how to leverage your database for refinances. This 47-minute call was a absolute masterclass. So kudos to you. Inside this call, it's how to set the strike rate strategy, how to frame the discussion, how to prepare now and communicate often to those customers, the micro moment rate drop gold mine, winning strategy on how to act fast, debt consolidation opportunity, and you also talked about the NAR strategy and opportunity. This was absolutely blockbuster. So if anybody's found this informative, but maybe not have enough clarity on how to execute around this, watch this masterclass. In addition to that, Craig Strent has created a refinance master plan, which is a step-by-step, almost like a white paper or a checklist, if you will, on exactly what to do with your database, what to say, how to build your total cost analysis so that you can maximize this opportunity. All of that is inside the Loan Atlas. So closing thoughts, Eric, I'll leave it to you. Any other advice that you would have for the Loan Atlas family?
Again, thank you, Josh. Thank you, community. Best thing that I can leave with, yes, there are a ton of resource within the Atlas, and it's massive, huge gold mines, but it also comes down to actually doing the work. The work can never be replaced by whatever we're looking at. Put in the work. That will pay the greatest dividends over and beyond anything and everything that's available.
Super well said, my friend. Hey, if this was valuable to you, please follow our YouTube channel, subscribe to us, give us a comment, let us know what questions you have so we can be even more valuable to you in the future. Thanks so much for tuning in.